discuss exactly what Jay Powell is likely to describe the economy as. Additionally, we've got the sports, which we always bring you, as well as our reaction to at least four of the top stock headlines of the day. That and more on today's Rebels Edge. Bang.
Wow, how's the Super Bowl hangover, man? No, I'm just kidding.
I
You're
tell you,
probably
when you're
fine.
done at the Super Bowl, Pete, to not drink, it's not an option.
It's not an option.
It's not an option. You got to drink. That's all it is a drink fest.
Oh,
I tell you
God,
what, it would be the worst place ever if you're a 12 stepper.
yeah.
Worst ever. Because all it is one big open bar
Yep.
the entire week. So, yeah, I'm still in a little bit of a brain freeze cloud or whatever.
Were you-
But it was fun yesterday, Pete, to be on News Nation, right?
Yeah, News Nation was great. That was really fun. Those guys are awesome. That host there does an outstanding job. You know, it's still newer to me, but I loved it. It was great, and you know, I think we hit some pretty good topics about what was going on, what's happening with tariffs, and what to expect. So it was a very good interview. It was fun.
Yeah, we were talking tariffs, like Pete said, folks. We were addressing some of the unusual activity, which many of you, of course, know us for that. But it's surprising, is it not, Pete, how many times people have inklings about things before they happen? Cleveland Cliffs, Steel Dynamics, STLD, and Nucor, three of the stocks. Now, you didn't have to be a soothsayer to know that President Trump was going to go after steel companies, in particular steel and aluminum, Pete,
Right.
that China was dumping because, they run out of room to store it after they buy all this stuff and stack it in warehouses. Eventually, they got to get some money for it, and they're dumping it in our market.
Mm-hmm.
And what does that do? It depresses prices of U.S. steel, not just the stock, but the actual stuff that, rolled steel and flat steel and all the rest. And it's not right.
Right.
So I applaud the president for going after him for it. But Pete and I were talking about what is it going to mean? Well, again, it remains to be seen, because it's not like we're going to work through the steel that is there right now in a week. We're talking months down the line if this tariffing of China dumping stuff into our country lasts for months. If it only lasts for a couple, what if it only
not
lasts for a
just
couple
China,
weeks?
John? It's all of the others as well. Not necessarily all of them dumping, but the imports, have gone up, and they're about 25% of everything that goes into the steel world of the U.S. 25% of it is imported. We'd like to cut that back a little bit. Let's see if we can't let our guys have a little bit better, even competition, right, going forward. So that I think is. I don't know how anybody, if you're on the right or the left, I don't know how anybody could push back on that to give us the opportunity to compete, and that's what this is about.
Yeah, if one country is running tariffs on our autos and we're not running on theirs, why?
Right.
Why? Anyway, we could not so much debate it, we could discuss it forever. But instead, let's dive into Jay Powell, Pete.
Yep.
Macro today, Jay Powell is testifying before Congress. This is part of a regular testimony. This is not an emergency or anything, folks. And he says they need to be patient. And I think Pete has nailed this time and time again. Take him at his word, folks. Right, Pete?
Yeah. I mean, absolutely, John. He said, we don't need to be in a hurry. We're going to do it the right way. And, a lot of people can push back and say, Jay Powell is in over his head or this, that, and the other. I don't agree with any of those comments, but I will say the guy's been a man of his word, and the Fed has been moving just as he has been projecting it to us. I mean, I keep using the word transparent. They've been transparent. And it also, you look at the CME tool, John, that jumped up pretty big that they're looking for pause, right? I mean, that was that for March. And that's something that probably expected to some degree, but up, 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 up as they hear more and more from Jay Powell and the Fed itself.
Well, then we've got fantastic futures, Pete,
Yeah.
and not a lot of volatility today. I know you'll talk about volatility. He always does. But I'll say, Pete, that I think crude oil pushing through 73 again is interesting. It's interesting for the fact, folks, that the tariffs may mean that China doesn't sell quite as much into our country because of a tax, if you will, that is put on their goods. If their goods are more expensive, obviously that's one of the reasons that China might slow down. If China slows down, they're a massive energy consumer. So that would tell us that perhaps crude oil and various energy sources should be going down, but that's not the case. So maybe people are thinking that this isn't going to last very long, Pete, and China's going to be right back to consuming electricity, consuming, and I know that gasoline doesn't run those plants. In some cases, diesel does, but in a lot of cases, coal and, of course, nat gas, Pete.
Yeah, absolutely. You know what? I'm going to give you a little bit of a surprise. No VIX today for me. There's nothing really to talk about. It's right around 16. It's either side of 16. So we're going to skip that one. How about this though, John? And we've talked about this, you and I, many, many times, but another all-time high for coffee. And I'm just going to say it this way, John. When the price of coffee goes up, Starbucks raises their prices. When the price of coffee goes down, Starbucks does not do anything with those prices. They just wait for the next time that it comes running back up again. That all being said, when you look at all-time highs for coffee, ironically, Starbucks is very near its all-time highs, John. I mean, that's amazing how that works. Can you imagine if that happened with gasoline at the pump? The price of crude goes up and then they never readjust to the downside. Well, that's what's been going on for coffee for a really long time. And it was 2021 all-time high was 117, John, for Starbucks. We ain't that far away from it. Right now, we're sitting very close to 112, 113. So we're very close to all-time highs for Starbucks as well. Keep an eye on that coffee, man.
Yeah, and as the oil guys like to say, Pete, not just on Landman, which I love.
Love it.
On the Paramount Network. Just love that show with Billy Bob Thornton and
Yep.
John Hamm, Demi Moore. I mean, great show. Ali Lauder. But I would say, Pete, that a gallon of coffee against a gallon of gasoline, which do you think costs more? And we all know the answer. It's a gallon of coffee, at least at Starbucks. A gallon of coffee would probably set you back $20.
Oh, way more.
maybe. Yeah. I mean, what? A venti is 20 ounces, Pete.
Yeah.
And that might set you back $4 or $5, depending where you live.
Yep.
So yeah, maybe it should be $30 a gallon for coffee. And meanwhile, gasoline's $3.75 or whatever.
Imagine.
All right. What about Lattice Semiconductor, Pete? Blowout numbers, and the stock blew up. It traded to 62 on the opening, blew up to almost 64, but now it's $6 lower than that, and it's still up 7% on the day. That'd be 2%, Pete. That'd be 7% just for those playing at home. Pretty big jump out of this stock today, eh, Pete?
Well, when you look at the outlook, John, and how bullish they were on their revenue guidance and all of the rest of it, this is a company that's got a lot of products that they're adding to themselves right now in terms of what they're going to be launching out there. So there's a lot of positivity going out in time. When you look at, the near term, they had kind of mixed results, to be honest with you, but I think it really was all about the forecast, all about the outlook. And when you look at that, there's also, John, some decent sized shorts in there. I know I bring this up all the time, but I think it's important. When you're 7 or 9% short interest, there's a little bit of panic out there, especially as you said, the stock gets up there well over 60, kind of pulls back a little bit. It's a lot closer to the highs right now between 40 and 65 or 85 rather. It isn't that far away. So when you look at it, the one thing that I am a little bit concerned about would be when I look at price to earnings, just trying to look at the fundamentals of the company, that's where it gets a little bit dicey because this thing's trading at about a little over 50. So Is it kind of expensive? Yeah. Could that they build themselves into that and not be as expensive? I think they can. So I think going forward, this is the stock for 2025 to keep an eye on.
Well, what about Select Quote, Pete? Because this one exploded to a new 52-week high today. Now, you look at that chart and it looks fantastic. I agree. Looks fantastic. You know, it's backing and filling, backing and filling. This stock was in the 40s, Pete, just a couple of years ago. And they get a big strategic investment. And you know what, folks? I think somebody had an inkling, like we say, that maybe they were going to get that big investment from Bain, because at $4.36, Pete, somebody came in and bought a lot of those February 450 calls, the right to buy it at 450. Well, what's that worth when the stock's 663, Pete? Well, it's worth $2.63. You paid 43 cents for it. How many times does that one go into the other? Well, let's call it about a 500% return, Pete. Not 2%, not 5%, 500%.
Yeah, hit a new high today, 685. I mean, everything you're talking about, John, they recapitalized. They had multiple folks that are in this whole thing as they were going through this, from Morgan Stanley to Bain, and you name it. They got a couple of board seats. They got all of that. Margin strength, yes. The revenue up 19% year over year. That's a big number. We like, I always like that comparison better than what they were doing as far as like what was expected on earnings. Are you growing? And yes, they are. They're growing pretty well. As a matter of fact, even the membership growth that they've got, John, is up 54%. So they raised guidance. They should raise guidance. I'm sure that they've got something in the future that looks pretty damn good right now. With all of the help that they're getting, this is great. And as you point out, imagine that. Somebody actually sniffed this son of a gun out and got a couple of calls in there that did pretty well.
Yeah, well, and Pete, you can see why somebody might want to put a lot of money in them here, because at $40 a share, it's a far cry from 1/10 of that valuation where it was just a week ago. Mm-hmm. So yeah, Select Quote, insurance, health insurance, and so forth. Some of those companies got hit pretty darn hard, but the government does throw a lot of money at these health insurers, folks. This is one to keep an eye on. I'm agreeing with Pete. And even though it's up big today, still up very strong, I would not shy away from this stock. Mm-hmm. How about Coca-Cola, though, Pete? One of Warren Buffett's favorites, because all the Oracle of Omaha does is drink, what, 4 or 5 of these a day, Pete? He attributes it to his long life, in fact. And I don't know that I am a real buyer of that much sugar, as apparently Warren Buffett is, but it works for him. And boy, another strong quarter for Coca-Cola.
Yep, the unit volume is up, John. Not huge, but up nonetheless, up 2%. That was something that was on decline, so that's no longer happening. When you look at the revenue that they were able to put up, that was pretty outstanding, up 6% year over year. So that's another one of those year over year comparisons. I like to see that. They also beat on the earnings, 55 cents versus 52. So you look at these numbers and you just say, you know what? These guys are moving along at a very nice pace. Now, we always compare them to Pepsi. They're actually not as close as people would think. Pepsi's got so many other products, but Coca-Cola certainly is doing something in the right way. And I'm sure the Oracle of Omaha is pretty pleased about where it's going on that direction, John, as it jumped up near $67 today. Not quite at the all-time highs up there or the 52-week highs, but not that far away yet at about $73. So something that's probably within the grasp of where it is right now. Maybe it keeps grinding to the upside over the next quarter or two.
Yeah, and Pete, I read that Fairlife, I know you and I, our mom used to love that, and they got some bad press for some bad behavior. Fairlife, of course, folks, is a dairy product, milk, if you will, that they bought into, Coca-Cola did, but now it's worth some $8 billion.
Yep.
And so, yeah, they make it for people that have low lactase tolerance. In other words, if you're lactose intolerant, that's one of the things that Fairlife can do. They take a lot of the sugar, allegedly, out of it by doing that, Pete. So there's a lot of good things about that side of Coke's market on the milk side. And just thought I'd point out that, man, $8 billion for milk. That's a lot.
Not
All
bad.
right. Lastly, Fidelity National Information Services, FIS, sorry. Earnings per share, $1.40 versus $1.36. However, their revenue fell short of estimates, Pete. And their guidance was also light, very light. And so the stock is getting hit hard today, very hard. It was down at least 15% a little bit ago, Pete. And that's a big drop for FIS.
Yeah, last time I looked, it was 16%, but it might be 15% now, John. Yeah, when you look at these earnings, yeah, that looked okay. $1.40 over $1.36, sure. Revenue, not so much. It was a little bit light there. They also guided not well at all, as you mentioned already, but the guidance for earnings, well, they missed on that. The guidance for revenue, they missed on that. You can't do that and expect for your stock to do well, because that's the major area that people are going to look when they're going through the earnings. The debt there, John, is climbing like crazy, by the way. $11 billion in debt that they've got right now. They do have some great free cash flow. I don't mind that. It's almost $4 billion. But that debt, like I say, $11 billion, that's a little bit spooky for me. There's a good reason why this stock is not that terribly far at 68 bucks, call it, not that terribly far from the 52-week lows of 60. So they've got to get this thing figured out. And they got to get it figured out in a hurry. And I have been told by a lot of people who have been using Fidelity for a while that they are a little bit, tight on certain things, and they're not comfortable with this and that. And it's not as fluid as people would like it to be. So because of that, I see a future that doesn't look all that great. This isn't one of those where you say, hey, it's down 15, 16%. I kind of like it here. I think it actually could hit a little bit closer to that 52-week low, John.
Wow. Well, folks, if you'd like to learn more about trading options, it's not an option.
Yeah.
If you actually go to this website, folks, it's notanoption.com. You can get this book. You just pay shipping and handling. That's it. The book is free. It's 250 pages or so, Pete, of strategies and so forth. It is not just, oh, this is how Pete made a fortune. This is how John made a fortune. It's a little bit of that because we describe how we trade, but if you want to learn more about how you might trade, if you knew more about options, this would be a great place to start. All right, Pete, what do you got as far as sports today?
Well, the sports, I think this would be kind of fun, John, especially just coming off the Super Bowl. The NFL, you and I know this, we talk about this all the time, but, it's 24/7, 365. There isn't a day in the year where the NFL doesn't have news stories that are interesting for everybody else, right? And I'm not trying to put that against the NBA or the NHL or the others. It's just the truth, right? I mean, right now, what do? The Super Bowl just ended. What's everybody's focus? Free agency. But before we get there, John, and I'll ask you about that in a second, but before we get there, I'm curious about this. So the game had another record, 2 in a row now, where we've broken the record in terms of audience viewership. Now, the numbers are pretty staggering, John. 126 million people watched in some form or another. That's a huge number. It's a record number that they were able to put up. I just wanted to throw out a few numbers for you. So the NBA's biggest ever was the Bulls and the Jazz, Michael Jordan back in the day and all the rest of that. They got a pretty good one, John. They had 35 million. That's not so bad. But how about this? They had to go back to 1998. They haven't even come close to it since. But I had to go back to 1998 for that number. The Celtics and the Mavericks last year, just to give you a little bit of an idea, 11 million. So 136 million, 11. It seems like the numbers are a little bit off here, but those are the numbers. And NFL is still king. It's absolutely amazing. I'll give you one last one for the NCAA. Do you know how far back you've got to go to get the highest ever there? 1979. A guy named Magic Johnson playing for Michigan State and a little fella named Larry Bird playing for Indiana State. That one, John, got 35 million folks watching that. But you've got to go back to 1979 to find that number. So the NFL is still king. It's absolutely amazing the numbers they're able to put up. And I say that as a guy who's been pretty critical of Goodell. Goodell has just been able to ride this ship pretty nicely. They got to change the kickoffs. They got to change how they deal with a lot of things on instant replay and stuff like that, John, just so that they can get the calls right when it's something that could really change the game. But you really can't argue too much with those numbers because they're absolutely staggering. Is there anything the NBA can do, the NHL can do, or Major League Baseball can do, John,
Of course.
to get
And
anything
you
close?
know the answer. Pete knows the answer before he asks the question, even, folks. And the answer is do away with load management.
Yeah.
If the players can't play 82 games or 93 games, whatever it is, then don't play that many games. I mean, people that pay for those seats pay to see LeBron James, pay to see Luka Doncic. People pay for the stars. And if they're not seeing those folks, it's not fair. And no wonder people then say, well, the heck with these guys. I bought a ticket for $500 and now I can't even give it away because he's not going to play tonight or whatever the story is. I mean, injuries, we all understand. People have injuries. People even get really worn out. But if that many games wears most of the league players out, don't play that many games. You know, then it's just a money grab where you're just selling tickets, but you're not going to put product on the court that people want to see. So, yeah, that's the easy part, Pete. As far as hockey, that's tougher because hockey is a great sport. You and I both played it, but it has not captured the American audience the same way that the NBA and NFL and Major League Baseball have. It's just different on TV. Even if you have the puck with the light chasing it or whatever, even if you have that, if you're not used to watching that, I don't know how you get better TV audiences than what you've got right now, Pete. But those men that play hockey, they put it all on the line every night. You don't see them doing load management.
Yeah. No, they're the toughest guys on the planet. They really are because they're not oftentimes as big, especially now as the NHL has kind of moved away from the big goons and the fighting and all the rest of that. They've got smaller. So it's interesting. And there are still a few big guys out there. I'm not saying they're all gone, but you don't have the same brawlers that you used to have, John. That they've changed the game a lot from that standpoint. And that might have hurt them a little bit, maybe to some degree too, quite frankly, because a lot of people liked some of the fighting that was going on in hockey and some of that stuff. Yeah. You ever heard of Slapshot? Paul Newman, by the way. But anyway, all right. How about this, John? Free agency, since they are 24/7, 365. How about this? Free agency. Now, I took a quick look. The top 10 free agents this year, 7 of them are wide receivers. Now, I'm just going to go back to my soapbox and say this, John. If I'm a GM of a team ever, I'm going to go out there and say, I don't need to pay a lot of money for a wide receiver because there aren't that much difference between number 1 and number 20 and not that big of a difference between number 20 and number 40. So the fact that those guys are some of the biggest free agents that are going to get some of the biggest contracts, it's going to chew up too much of what they've got underneath in the cap itself. And I think that's a mistake. But there are some quarterbacks. So I'll throw these out to you, John. The quarterbacks, top 2, in my opinion, Sam Darnold for sure, number 1. And I went through the rest of them. It's a kind of a lot of nobodies, except for maybe, and you'd be the right guy to ask, Justin Fields. Is Justin Fields a guy, I know he's in Chicago, now he's been in Pittsburgh, but is he a guy that you think has enough talent to go to the next level as far as where he goes if he gets to the right team? Because he wasn't on the right team with the Bears. You and I have talked about that. They didn't have anybody around him. They had no offensive line to block for the guy. The guy was getting sacked every play. So if he gets to the right place, is he athletic enough and good enough to be a quality quarterback, do you think?
Sure, I do think so, Pete. But you do destroy the player's confidence, and the player needs to get his confidence back. I mean, obviously, Sam Darnold, confidence destroyed with the Jets. He bounced around with a couple other teams, and all of a sudden, you give him Hendrickson, you give him, one of the best wide receivers in the game, and another really, really top quality wide receiver at the other spot. And yeah, you can see the difference it makes. But when you're Justin, can he shake that off, Pete? The fact that, you know, the confidence that he needed during these first 4 years of his career or 5 years of his career, it's tough to all of a sudden, you know, if he gets in the right situation, the answer is yes, he could. But otherwise, it is tough. Meanwhile, is somebody going to ruin Dion's kid? Because you know that kid Shadur is a great player, but if he got the same sort of situation that Justin Fields was in, he might have a tough time getting his swagger back too. Because NFL is just a different level. Everybody's fast or faster. Everybody's big or bigger. I mean, again, you talked yesterday, Pete, about the massive size of the Philadelphia offensive line, the Eagles. They are, I think they averaged, Pete, 6'6" and 325 across the front. And obviously, the big kid from down under that was a rugby player, 6'8", 360. I mean, just blocks out the sun. So you're a player in college football and you come out against a full-grown man like that, it's a whole different game. As our friend Ray Lewis would say, Pete, it's a man's game tonight, baby.
It's true. You know, there's one spot that everybody's finally kind of woken up to, John. It's funny because I'm listening to all these guys, all these pundits that have been around for a long time. You and I have talked about this forever. We knew that the King Henry, would have the kind of year that he had because he's at the right place with Baltimore, right? And he's big and he's fast and he's strong. Saquon, same thing, big and he's fast and he's strong. So now everybody's finally woken up to that. So you got Najee Harris out of Pittsburgh and then Nick Chubb from Cleveland. Those two guys are kind of big, kind of strong, pretty athletic. Those guys would probably be the right guys. The only problem is you start looking at age when you look at Chubb at 29 as a running back. That kind of gets people a little bit, you know, going sideways on that whole thing. But I got a trade for you that I think makes a lot of sense. It could be interesting. Myles Garrett wants to be a free agent. He's probably arguably the most talented defensive end in football, potentially. But he's stuck with the Cleveland Browns, which is why 90% of the people that are listening to us right now, John, have never heard of him hardly, because he's in Cleveland where they don't win. He wants a playoff team. How about you get Debo and a couple other picks from San Francisco and put him out there on the other side of Bosa? You got Bosa on one side, you got Myles Garrett on the other side. I think that defense becomes the number one defense again overnight with some sort of a trade like that. Something that gets him away from Cleveland and into San Francisco. And I think it could happen. And Debo Samuel wants a trade. Send him to Cleveland.
Well, that wouldn't be such a bad thing, Pete. Obviously, Myles, a huge talent, a great personality, and a great kid. But I can think of, you know, at least 6 teams that would benefit from having that guy on their team. And, you know, I think he makes any team he's on better. In particular, you talked yesterday about Hendricks in Cincinnati, the guy on the other side, Pete. I think he would make that better. But from a standpoint of where would he like to be and where would he get not just a better shot at the Super Bowl, but a shot at better sponsorship and so forth, Pete, believe it or not, LA Chargers might not be such a bad spot to have Bosa's brother on the other side.
Either way, you get a Bosa. You get a Bosa with either, so it all works out. I got to tell you, that family, and you and I both know, their father was part of the Killer Bees with the Miami Dolphins back in the day. So that is a talented, unbelievable family. I can't imagine what those reunions and Christmases are like with those guys.
Yeah. Well, folks, we appreciate you tuning in. Remember, if you'd like to join us, that little QR code right down there in the corner. Yep. Thank you, Jared. That little QR code, that'll get you registered if you want for our March 22nd event out in Las Vegas. Mark Lepresti is out there today securing some speakers as well as checking out the venue. It's at the MGM Grand, 22nd of March and it's going to be a fabulous trading conference, folks. If you would like to learn more about trading and that conference, scan the QR code you see on the screen, and you can see all about getting a ticket, getting out there, and why not? It's still the winter time, just getting into the spring at that time, and you might get a nice, 3 or 4 days, depending how many days you want to be out there, because Grant Cardone has his 10X RebelCon, or no, he calls his GrowthCon, Pete. We
GrowthCon.
call ours RebelCon, but he'll be at ours as well because he's part of us. Anyway, thanks for joining us, folks. Have a great one. We'll be back at 1 o'clock tomorrow.